Welcome to SEATEDWIT'S. This is an educational platform focused on financial systems, market structure, and capital governance. This podcast is not about predictions, speculation, or personal financial advice. It is about understanding how capital actually works, at the level institutions, funds, and governments operate. Today's session addresses a foundational concept. Capital is not an asset, it is a system. Most individuals are taught to think of capital as a thing, a stock, a bank balance, a cryptocurrency token. Institutions do not think this way. They treat capital as a structured flow governed by rules, not by emotion. Capital money, capital, DEVIATION, process, governance, plus risk, plus time. When this distinction is not understood, people attempt to enter markets without understanding the system they are entering. Income, retention, allocation, risk control, reinvestment. At an institutional level, capital moves through a system. It begins with income generation, not investment. Income. Without income stability, capital formation cannot occur. Labor, enterprises, state revenue, productive assets. Next is retention. If income is not retained, it cannot compound. This is where most systems fail, especially in emerging economies. Only after income and retention does allocation occur. This is the step most people start with, incorrectly. Institutions allocate capital only after structure exists. Stage individual institution income, inconsistent, systematic retention, weak enforced allocation. First step, third step, risk ignored central. This inversion explains why participation does not equal progress. Risk management is not a feature, it is the core of capital systems. Institutions are not focused on returns first. They are focused on survivability. Returns are meaningless without continuity. No institution deploys capital it cannot afford to lose. Individuals often do the opposite. In many African economies, capital systems are incomplete. Income is often informal. Savings instruments are weak. Access to institutional allocation vehicles is limited. Layer, developed markets. Fragmented markets, banking stable. Partial investment, accessible restricted risk tools, advanced minimal. This pushes individuals towards speculation, not by choice, but by absence of structure. SEATEDWIT'S does not exist to encourage participation without preparation. Its role is to reconstruct missing layers: financial literacy, market structure knowledge, risk understanding, governance, awareness. Education is not content. Education is infrastructure. Capital is deployed only after training. Before capital is deployed in institutions, people are trained, traders are certified, risk managers are tested, committees follow doctrine. When individuals reverse this order, losses are treated as bad luck instead of structural failure. Understanding capital systems changes behavior. You stop rushing allocation, you prioritize income stability, you respect risk, you think in decades, not days. This is the mindset gap between participants and institutions. How institutions price risk. Why portfolios are built, not guessed trusts, funds, and control, generational capital governance. This podcast will continue breaking these systems down, slowly, structurally, and accurately. This is SEATEDWIT'S, Capital Explained as a System.